Hello everybody. So today I'm breaking another rule of YouTube, giving you some price targets for the price of Bitcoin. Many YouTubers have made that mistake. I feel comfortable doing that though because I am reusing the numbers from someone else. I'm reusing the numbers from the Bitcoin 24 model, which was published by Saylor on GitHub. So these are not my number, these are Saylor's number, so I'm okay doing that. However, everything around those numbers, the spreadsheet you see here is my valuation model for MicroStrategy, the stock. And so I'll walk you through the model, and then I'll show you some leaps and some possible leaps that I am looking at, as the price right now is really in the gutters. I don't understand. I mean, the FUD is really driving the price down, and it's becoming too much. And, it's time for me to start looking at leaps. So let's look at the model. This is a model I had published on the Patreon a while back, just updated it. I'm posting on the Patreon right now. But anyways, let's go to the base case scenario and the bull case scenario. In this model, I used to have a bear case scenario, but that bear case scenario is now a joke. The base case scenario is now the new bear case scenario, if you ask me. The bull case scenario assumes that, for example, in December 2025, they have about 30% of a BTC yield left, and it assumes that in the base case, they only have 20% of BTC yield left. And then I am using a joke grade BTC yield for 26 and 2027 in the base case scenario. I'm really only assuming they will do 20%, 19%, and 18% Bitcoin yield, and all the way going down to not single digit, but almost, right, 11%, 10% yield in the later December months. So the key to this model is trying to calculate what the MSTR common share price will be. And so the way to read this is I've highlighted it here. So you have the Bitcoin price right here. And of course, the price of the shares will be dependent on the Bitcoin price. Then you have the Bitcoin yield right here. And then here you have what the shares of MicroStrategy would cost. What would an MSTR common share be in the bear case, in this case, at a price to NAV of a 1.5. I consider 1.5 price to NAV to be the floor for MicroStrategy. Remember, I also do things a little differently from other YouTubers. I use price to NAV because, in my view, the converts, it's debt, sure, but it's not normal debt. It's debt that will be diluted, and that's why I think it makes sense to use price to NAV, but it doesn't really matter. MNAV and PNAV is about the same, frankly. It really doesn't matter that much. But the point is, I think the price to NAV of 1.5 is the low. And so how do you read this chart? Well, if in December of 2025, the price of Bitcoin is 140,000, and if we achieve above and beyond what we already have, we achieve another 20% yield, and if the price to NAV drops from a 1.7 to a 1.5, then the price of MicroStrategy shares will be 524. That's the bear case with the bear price to NAV. So we're assuming another, 13-14% drop in price to NAV, and we're assuming a bearish BTC yield, and that would be 524, which is still quite substantially higher than today. And then I give you the price to NAV unchanged. So if the price to NAV stays at 170 in December 25, MSTR shares would be 595. And if the price to NAV moves back to, say, a comfortable 3, that would be $1,000 a shares that you would get at. And of course, these price targets change on whether you have the bull case scenario. And the bull case scenario is assuming they're going to do 30% yield for the rest of the year. I think it's possible, especially if they keep pushing the preferreds right now. I think it's possible they do that, especially at the speed at which they do the common ATM, which of course I love. On this channel, I'm a big ATM guy. I love ATM. Anyways, if you go into a bull case scenario and you assume not only so bull case scenario at a 1.5 or 1.7 price to NAV, you get to a share price of 645, 567. So still much higher than it is today, right? 645 is almost a double. But if you assume that the price to NAV expands to a 3, then you get $1,100 a share. And that's all the targets on December 25 with these assumptions. You know, if Bitcoin stays at 104,000 the whole time, you're not getting anywhere of this return, right? Bitcoin needs to move. But with these assumptions, you get with these really good price targets, and then you can move to December 26, December 27, and of course, the more you move along, the blurrier it gets, and I'm going to use December 2027 to calculate my leaps, because that's when the leaps are available. And so the Saylor model, keep in mind this is the Bitcoin 24 model from Michael Saylor. The Saylor model assumes that in December 2027, so in not quite 3 years, but 900 days, 2.5 years, this model assumes that the price of Bitcoin will be about $300,000, and then you gotta imagine what kind of yield it can get. So can you only do 19 and 18% in 26 and 27? Or can you do more? Can you do a 27%, 25%? The yield is key. Either way, whether you look at my bear case or my bull case, you're getting a CAGR of 50% a year. You're getting a stock that returns in line with some of the world's top stocks like Nvidia, like Tesla, and actually in the slightly bullish cases returns more than an Nvidia or a Tesla. As we all know in this community, we all know that MSTR has beat all of the other big caps. Yes, MSTR is a big cap now, it's a $100 million company, it's a big cap. A little caveat, and that's a caveat that I know that whenever you do these models, the 10 years out model, people are quick to point out, and I agree that past 2028 or around 2028, when you look out 4 years, 5 years, the model starts to fail. The model should start to fail around here as Saylor, if and when Saylor approaches or exceeds 1 million coin, the model should start to fail. Because if you exceed 1 million coin, there's not a lot of things that can happen. One thing that can happen is you have a parabolic move in the price of Bitcoin, and so that means that the model would show much lower yield, but a much higher appreciation of the price of Bitcoin, or you have the opposite. So I'm not sure what the impact on the individual lines of this model would be if the price of Bitcoin, if the number of coins accumulated by strategy were to go past 1 million. I'm not really sure what the numbers would be. It just gets very blurry 4 to 5 years out. So because obviously it's very tough to imagine in December 2045. It's very tough to imagine that Saylor would have 2.6 million coins, if that makes some sense. There's going to be a stop at about 1 million coin at some point. It's going to be much harder to accumulate Bitcoin, and so the yield should drop, but the price of Bitcoin could go up much higher than in the Bitcoin 24 model. So as far as the price of MSTR shares, it's probably fairly neutral. But as far as how you calculate the model, it's probably very different. So we probably have a MSTR stock, into the 2030s, 2033, 2034. MSTR stock will probably trade much more in line with the price of Bitcoin than it will trade in line with the BTC yield, and that makes a lot of sense. Even in today's conversation about smaller BTC treasury companies, that makes a lot of sense. The bigger you get, the harder it is to acquire the coin. Let's talk about leaps now, because that's the subject of a video. The model plus the leaps, pair these two together, and how can you achieve serious gain? If you look at that, as you know, I've been annoyed by the valuation of some of these companies, and I've gone into cooler leaps. The cooler leaps, I think cooler, the stock is down 75%. It's ridiculous. CEO is committed to a Bitcoin strategy, small bag. They could grow it very fast. So I was very happy to buy long-term call options and cooler. And as FUD builds up against MicroStrategy all over Twitter, all over internet, I am preparing to add leaps. If we get another drop, I might add leaps. And of course, you'll know on the Patreon how I do it. I know many people who follow MSTR love the leaps. I might add leaps because this is getting ridiculous. So let's go through some of my leaps principles, right? So what is a leap? Of course, it's a super long-term call option. You're purchasing from someone else a super long-term call option. You're typically purchasing from a money manager who's not a believer in the asset and just wants to earn that premium. That's probably who you're purchasing it from. And of course, you're taking the other side of that trade and you're a believer. So anyways, so let's look at the leaps principle. At the money strikes, to me, this is the most optimal spot, right? So slightly above or slightly under. The goal of mine, of course, will be to acquire the shares in 900 days. So, make sure you have some cash inflow from somewhere so you can acquire in 900 days. Because if you sell the leaps, then you get taxed, right? So if you acquire the shares, you don't get taxed. I just want to acquire the shares, and the goal, of course, is when we get to the glorious year of 2035, the goal is to slowly start borrowing against it and have a nice lifestyle, borrowing slightly against the shares who might not be discriminated by brokers anymore, because if this stock keeps growing, it will have a 25% maintenance ratio like Apple, like Nvidia currently enjoy. So in this example, I'm showing it to you on Robinhood, but of course all brokers are the same on Robinhood. The example would be a December 17, 2027. You would take the longest available, that's 930 days from now. It's really a beautiful thing that they have them out so long, right? A lot of the options, unfortunately, only have January 27. Some of them only have January 26. But anyways, so long-term call option, 130 days. The strike price, $370, so slightly above what it is trading right now. And then in the models, I'm going to use my two price targets, 1576, which is my low price to NAV of 1.5, and my base to bear, my bear case scenario. My base case is really my bear case scenario. And my bull case scenario, I'm going to take a price to NAV of 3 in the bull case model. So you can find these numbers right there. 1576 in the December 2027 column. For the low scenario for price to NAV, the price target is 1576. And then in the bull case scenario, you see it right here. It's this one right here. It's 3,860. I'm assuming a price to NAV of 3. And I'm assuming, of course, a higher yield, a higher BTC yield, higher accumulation, right? And I'm not changing the assumptions of a Bitcoin model. Of course, Bitcoin could go do even better, and then these numbers would get better. Anyways, let's go back to calculate what the profits would be. Let's go to the profit calculator. So of course you're probably used to this. If you've done LEAPS before, you go to options calculator. .com and you type in your assumptions and you look at the model. And when you type in the assumptions, you look at the model and you assume that the stock price, it will go from 369, which is the low of today, to 15,580, which is my bear case scenario. 1576. It's actually a little higher. It didn't show it all the way. Anyways, it doesn't matter. The point is, if you do this, and actually it reaches the base case of $1,500 a share, the return on the LEAPS would be a 6.5x your money. 6.5x your money. It would be plus 558% or 6.58 times your money versus the shares alone appreciating 325%. So the LEAPS roughly double your returns, a little less than double, but roughly double your returns. As always, a key question when you buy LEAPS is, why don't you just buy LEAPS on margin? Why wouldn't you just borrow on margin and just buy the shares, right? Well, you can do that with Nvidia, right? And it could be cheaper if you have a good rate on margin. But can you do that with MSTR? The answer is no, you can't really do that on MSTR. The margin requirement is just too high right now. Right now, the stock MSTR is being discriminated by brokers. It's just too high. And, we've seen what happened during the tariff tantrum of April suck-on. We've seen what happens when all stocks started dropping. What happened to the maintenance requirement of a stock like MSTR? Well, it went way up at most brokers. Most brokers wanted you to have much more collateral. So borrowing on margin to buy the MSTR shares, half of them on margin, that's a risky game to play, and that's not something you can do because the margin requirements are no good. This is not Apple stock. This is not Apple stock, if that makes some sense. So in this specific situation, I think the LEAPS make more sense. Unfortunately, and for all of the other BTC treasury companies who have 100% maintenance requirement, the LEAPS are the only thing you can do, right? And if you're in a retirement account, the LEAPS are the only thing you can do. But if you're in a retirement account, you're likely not going to exercise those LEAPS. It makes little sense, right? Because you wouldn't pay tax in a retirement account. Anyways, that's for the price target of the base case, a 1576 price target. Buying the LEAPS today, the LEAPS, by the way, are, as you know, so it's $18,940 is what the LEAPS cost, and you buy those LEAPS, and you would have 100,000 for 137,100,000. So you're turning 18K into 100K. That's a 6.5 times your money. Pretty impressive for a base to bear case, or a base now bear case scenario. Let's move on to the bull case of all of bull case scenarios. So in this bull case, You're assuming the yield is going to be great. You're assuming the same price of Bitcoin of 300,000 in 900 days. But you're also assuming here, and this is a big if, but you're assuming a price to NAV expansion back to a 3. Remember, in November, the price to NAV on MSTR was something like a 3.5. So it's not entirely crazy to assume that the price to NAV could expand back to a 3. Especially as some of you start pointing out in the comment section, he needs to stop the ATM, he needs to stop the ATM. Well, I don't think he does, but what if Saylor disagrees with me, and what if he wants to actually stop the ATM just to see the price rise? Maybe he does, I don't know. But if he stops doing the ATM, if the price to NAV pumps back to 3, and then if the yield achieved is higher than my bear case, then you could potentially get to a price of 38.60 for MSTR. The MSTR share price, each share in December 2027 could be 38.60. Go look at my model right here. 38.60 is where it is. December 27 column. The high price to NAV scenario. In the bull case scenario, I get to a 3,860. So in that case, this is where it gets nuts. This is where it gets crazy. In that case, your shares, your LEAPS could return 1,800%. So that would be a 19 times your dollar, 19 times your money in the bull case and the price to NAV expansion case and the $300,000 Bitcoin case. In that case, 19 times your money versus about 10 times your money if you were to just own the shares. So we find that about 2x with the LEAPS once again. But again, this is just a mind-blowing return in the bull case scenario. So MSTR, when I look at MSTR LEAPS, I'm like, this is the epitome of an asymmetric bet, because keep in mind that we're looking at a 6.5x in my bear case. We're looking at a 20x in the bullest case that I got, and what's the risk, right? Losing everything. So your risk, quote unquote, is a 1x. Right, but your max gain is potentially a 19x. So you see the asymmetry here. I like that bet. If you have a diversified portfolio of asymmetric bets, a few of them are going to hit. Right, this is the point of investing. You're not looking at a plus 1x minus 1x. This is not an equal game. This is a game where the upside, if and when it works, is just so much higher than the potential downside, which is just losing everything is a potential downside. So I love this setup. Of course, take all models, with a grain of salt, with an enormous grain of salt. Take all models with an enormous grain of salt. All models are wrong. Some are useful. As the famous quote says, this is not financial advice, of course. What am I doing? Well, if MSTR is gonna keep staying this stupid cheap, I'm gonna shift from buying the shares to buying some LEAPS is what I'm gonna do. And so we'll see if it stays this stupid cheap. I think the main reason why MSTR is so cheap is because the Bitcoin conference was, in my view, disappointing. Like that GameStop announcement. Come on, that was so disappointing. And the speech of the GameStop CEO was so bad. There was a lot of disappointment in the Bitcoin conference. That's just me. Keep in mind, you may not agree, because I'm an older Bitcoiner. I've been in the space for a long while now. So people will agree to disagree on this one. But I think the market was largely disappointed. And there is a degenerate who keeps placing 40x bets on Bitcoin and who keeps getting liquidated. So my fear is that I think he has a 101k bet on Bitcoin right now. So my fear is that market makers are going to try to make the price of Bitcoin go to 101k for like a good hour, and then Bitcoin could pump back up. I don't really know. I don't really follow the short-term stuff. I am a long-term shareholder, and MicroStrategy to me will keep giving us gains. But this is not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.